My hands up. This is like okay, we're live.
Morning.
Good morning. Welcome to the Morning Muffin Show, your morning carbo load of real estate. There we are. Welcome, Jody Hippen with Wintrust Mortgage.
Good morning, Jennifer. How's
Today
life?
what?
How is life today?
I think it's good. I think it's
It's a
good.
day.
Yeah, how was your Easter? Do you
We,
celebrate Easter?
yeah, we did. We had a very nice for once, went and dressed up in the Easter dress, went to church outside in the parking lot. It
They had
actually
church
really
outside.
and got to, yeah, because a lot of the churches still are not allowing 100% of the people in. So they're doing outdoor services.
Well, and it was beautiful for it yesterday.
Oh, perfect. And then just to spend the whole day outside. I mean, we haven't had an Easter like this in years. So
Mhm.
very, very nice.
The bridge of my nose is a little pink today because I was outside a bit. I'm gonna get freckled.
I was going to say a little sun.
I get really badly freckled in the summer. Like I don't get a tan, I get dotted.
Well, hey, the freckles make a very nice tan. That's for sure.
Thank you. Well, welcome. Here we are today talking about contract for deed. Jody, tell
Uh,
me about, you've been in the business a while now, like 30 some years.
yes.
Okay.
Leave it at like 30, 35. Yeah.
Yes. So tell me about oops, I did not turn my phone off. Sorry. Tell me about your experience with contract for deed.
Well, okay, I'll be honest. We don't see a lot of them. It's to me, I would go more old fashioned. And I'm saying that because, like, when I first got into the business, maybe in the late 80s, contract for deeds were a lot more prevalent. You heard about them more often. Um, Contract for deed, of course, is another way to buy a home without obtaining your own financing. So you're basically, the seller is going to be the mortgage company or the bank. So you're actually doing financing directly with the seller. Um, Sometimes at favorable terms. I would go usually within a percent or two of current interest rates. And then 9 times out of 10, there is a balloon due on that contract for deed as well, meaning they want you to make, say, 2 years, 3 years worth of payments and then pay them off.
Okay.
Yeah.
So a balloon payment, for those of you watching that don't know what that is, it's basically like Jody said, you pay 1 or 2 years worth of payments and then they want you to pay the rest off in one giant payment. Whether that is obviously refinancing and
Yep.
getting it under a mortgage.
Yep. So that's where a mortgage would then kick in, is because, yeah, at some point when that balloon comes due, and I would say probably 6 to 9 months before it comes due, you'd contact a mortgage associate and actually talk to them about refinancing, because now technically there's a lien on the property, and the lien being the contract for deed or the seller. So then we would then get an appraisal to support the value of what you agreed to pay, and then obtain a mortgage accordingly to pay off the rest of that balance or that balloon payment that's due. One of the things I have found that definitely can become an issue on a contract for deed, however, is, let's say you negotiate a price of 200,000 for the property, and that was this year, and the contract for deed states you make 5 years worth of payments. Who knows what the house is going to be worth in 5 years? You hope it's going to appreciate. You hope it is. But what if we're in a down year and values come down? Now you're sitting on a property that is less value than you agreed to pay for it. So that can get a little tricky between a buyer, a seller, and then a mortgage company, if in fact you have to go to do a refinance and pay off the balloon payment.
Hmm. So, what kind of people do you see most often doing refinancing,
It
contract for deed? Because you
Yeah,
obviously wouldn't see them at the beginning; you'd see them
no,
at the
you're right. Yeah, because they don't come to me and ask me about contract for deeds. But I would go, for the most part, And it goes with all across the green, but I would say majority of the people are ones that honestly can't get financed, maybe have mediocre credit and don't qualify for a qualified mortgage, or maybe people that have unique income, but maybe we can't verify it in a normal stance, but they can prove it beyond a shadow of a doubt. Maybe they work for cash to the seller. Maybe it's people that don't know if they want to buy 100%, so they're going in on a contract for deed, which is like a rent to own. If you think about it, it is. You're renting that property, however, you don't own it. You know.
Yeah.
So I would say for the most part, it's usually income or credit related, because those are the two reasons why someone would not come straight out and get a qualified mortgage.
Correct. Correct.
Yeah.
Yeah. And it is kind of standard, like a normal purchase agreement, whereas they have a down payment, but this is all kind of like agreed upon with the seller and or their agents. If they have agents, and it is common, we have done some, but one of the things that I like to mention is contract for deed needs to be um, the house has to be the mortgage has to be paid off. Like the
Oh,
owner has
good
to
job.
own it 100% in
Yep.
order to contract for deed it, because they can't convey it with a lien on it from a mortgage company. That is illegal, you guys.
And that is where you can see that people have gotten into trouble, meaning they've taken out the contract for deed, they've made their classic rent payments to the seller, and here to find out the seller never made his mortgage payments. And now all of a sudden the bank's coming after the seller and saying, you got to get out of the property. Seller doesn't live there, the renters do. So you can see how it becomes an absolute disaster if you don't do your research.
Absolutely, absolutely. And what I have had some creative clients before where we'll just make a purchase agreement for a
Okay.
year, and
Okay.
then we'll rent it for a year, and they say that, this purchase agreement expires in 1 year, and you either have to buy it or you have to forfeit your earnest money. Like, that's
Right.
it. And the client will then say, okay, well, we'll take a portion of your rent and put it towards your closing costs.
Right. And I've heard of that as well. Absolutely. So, I mean, it can be a very, very good program for someone, like I said, that maybe is a year away from being able to obtain true financing through a mortgage company because of credit or because of income. It's a way to save the house, I guess is the way I would word it, like save it because it's the house you want. But you do have to get the seller to agree on the contract for deed for sure.
I can hear the birdies behind you.
Oh, that's
I
a good sign of
can't.
spring. That's a great sign of spring.
It is. Okay, so I do have I'm going to share my screen. Now, remember, I might have to do this 2 times because it's a little fickle. But there is a understanding contract for deed document here
Okay.
from the Minnesota Home Ownership Center.
Oh, nice.
So to go back and do a little history on contract for deed, there was in the past a big, large, between the 1930s and 1960s, a big upswing in contract for deed. And a lot of it had to do with unethical and racist mortgage practices, such as redlining,
Oh, yeah.
steering, things of that nature. And so, like you said, you saw them a bit in the 80s
Yep.
because fair housing was still doing its thing and becoming more nitty and gritty. Women's rights kind of came, like, women couldn't get a credit card until the 80s. So, like, credit was very difficult for women to get until the 80s. So we've seen a lot of changes throughout the last
There
40
were
years.
companies that actually were like taken down, unfortunately, by the government because of this redlining. You know what I mean? They
Mhm.
actually got caught in their practices. And so, therefore, the laws have become way more stringent. So,
Mhm. And
yeah.
that's also one of the reasons why I, doing a lot of business in Minneapolis proper, we still see some of the aftermath of redlining, some of the neighborhoods that are still segregated and stuff. And we still see some active landlords trying to, there's some very popular names, which
Yeah.
do I won't say on air, but if you wanted to have a private conversation with me, we could, that are kind of known for this contract for deed in these certain neighborhoods. And they will, that the other part of contract for deed is there is no appraisal. Unless you are paying for it yourself.
So you're agreeing to the terms.
Exactly. Appraisals can be like $700. If you're paying out of pocket for someone who's like thinking they're getting a deal and they're like, oh yeah, no. And they forego it. They might be overpaying for the property. Like you said, like you have to think in the long term. And so then what ends up happening is when that balloon payment comes around and they're forced to try to make good on their contract for deed and to close it out, they're having problems, and then the seller can cancel it and move on to the next person.
Correct. So you basically it's rent. So you're basically throwing away rent, thinking you might be getting a home, but then to find out maybe the value is not there or something. So I agree. It's something you definitely have to do research on. You don't just want to jump into a contract for deed because you think it's an easy way to get a house.
Right. And I'm gonna blow this up a little bit. This is my favorite part here is, will I be required? And it says the seller should. It says sellers often require a down payment, but most of the time the amount can be negotiated. Any down payment paid to the seller should be applied to the principal. It's not a has to.
Correct.
It's a should. And so language is very important, you guys. This is a legal document that you will be signing. And so you have to understand that every single word has meaning and that you should completely understand what you're getting yourself into.
Yeah, and there are negotiations where, once again, you pay a payment to the seller, and it states, that maybe the buyer has to pay taxes and insurance on top of that contract for deed payment. There's just all kinds of loopholes where the seller can easily take advantage of a buyer.
Yes.
Like I said, and like the key thing, like you had said, Jennifer, you absolutely have to make certain there is no outstanding mortgage on that property if the seller is going to be selling it on a contract for deed.
Okay.
That seller will make his mortgage payments.
And I'm going to do one more here. Please excuse me. I shared that right now with you guys in the comments, and it is a PDF. So if you have the opportunity to print it out and read through it, I highly recommend it. Now, this tab here is from, once again, the Minnesota government about contract for deed. This is an article that you can read through it very well. It's very small. So there's not a lot. There's some important tips here. For example, get some advice, get an independent appraisal. This is understand your financial responsibilities, because home insurance is super important, and you don't know, part of your payment could be agreed upon to be going towards insurance. It doesn't mean that they're paying it.
Right. Right.
I can't, I have a hard time trusting people in this circumstances because there is, to use another legal term, precedent for my opinions on contract for deed. Okay. Now I've got one last thing to share a little bit more. If you guys are interested in the racist roots of contract for deed, there is a really great, it's a little outdated now, 2016 from the New York Times, but this kind of explains a lot about it. It was really well known in Chicago. Oh, it says I didn't share it. I have to do it. this one 2 times. So it was really popular in Chicago. If you actually look up contract for deed, a bunch of articles from Chicago pop up.
Yeah. I can only imagine certain prominent cities probably had concerns with this. And like I said, on the mortgage end, I don't hear about it all that much. And I know as realtors, you probably don't as well either. However, it is something that is kind of like a need to know. You need to kind of know some basic facts about it if it is something that you're going to look into or get into. A lot of those would be, some people do maybe try to do a for sale by owner, okay, and sidestep the whole real estate agent part, and that's fine once again. But if you're going to be looking at that particular situation, you make sure that it isn't a contract for deed and that it is a legit sale, and you have to do your research on those for sure.
It's a large purchase, and it could devastate your whole life, like if you make it wrong.
Yep. And you
So
want to, you can get out from under it. You want to make sure you're abiding by the terms, because any little slip, and there could be that way that, like you said, you could have just paid rent for 3 years and you still don't get the house.
exactly. Okay, you guys, this is it. We're running kind of long, so I wanted to make sure to be mindful of your time, Jody. I won't have you back for another 2 weeks. Are you
Well,
going to enjoy time with Cabin?
fine.
Oh. Well, it doesn't mean that we won't see each other for 2 weeks.
We will definitely be talking for sure.
Oh,
But yeah, anytime you need help with a mortgage, give me a call. If you have a real estate need of buying or selling, you call Jen. She's the
yes.
best.
Do you want your phone number up here? Do you want to say it?
651-263-0896. Best way to reach me.
And I'm Jennifer Codis at 763-607-3226. Okay.
All right.
Bye.
Have a good day. Bye-bye.